Hello. Welcome to JKO News, where you get more facts and less opinions. This is the Week in Review, for the 13th to the 17th of February 2023. 4 mysterious objects have been shot down over North America. The first of the 4 objects, identified as a Chinese surveillance balloon, was shot down on February 4th. But China has denied any involvement with the other objects, including one shot down over Deadhorse, Alaska, on February 10th, and another over the Yukon in Canada the following day. Joshua Semeter, director of the Center for Space Physics at Boston University, said, quote, "The object recently shot down over Lake Huron was described by one of the pilots as octagonal and hovering at 40,000 feet with no obvious means of propulsion or lift. This account bears some resemblance to previous accounts by Navy pilots. I believe we will learn a lot if the vehicle can be recovered and examined." End of quote. After the big drop on the value of the ruble versus the dollar, around the beginning of the Ukraine war, the ruble recovered somewhat. However, the currency strengthened further after the rubles for gas announcement. On the gold backing announcement, the currency has continued to strengthen to about 83 rubles to the dollar. That's fairly close to Putin's announcement that 1 gram of gold equals 5,000 rubles, which effectively creates a gold-based exchange rate of 81 Russian rubles to $1. The tough sanctions on Russia caused big shifts in their foreign trade. In friendly countries, the process of de-dollarization is underway, and the share of settlements in soft currencies is growing, by trading with yuan, rupee, rial, and other currencies. Gold can be a unique tool in the fight against Western sanctions. The foreign gold purchased by the Russian central bank, with various soft currencies, can be stored, used for cross-country settlements, currency swaps and clearing operations. Russia, together with its eastern and southern partners, has a unique chance to walk away from the dollar in the debt-based system. The Federal Reserve's vice chair, Lael Brainard, is resigning and moving to the White House to lead Biden's National Economic Council. While she has supported rapidly raising rates over the past year, to fight inflation by slowing the economy, Ms. Brainard has at times emphasized the risks of lifting rates more than necessary. The central bank raised rates by 4.5% over the past year, the most rapid adjustment since the early 1980s. The Federal Reserve Bank of New York issued its quarterly report on household debt and credit. The report shows an increase of 2.4% in total household debt in the fourth quarter of 2022, to $16.9 trillion. Balances now stand $2.75 trillion higher than at the end of 2019, before the pandemic recession. Mortgage balances rose by $254 billion in the fourth quarter of 2022. Credit card balances increased $61 billion in the fourth quarter, surpassing the pre-pandemic levels. Auto loan balances increased by $28 billion in the fourth quarter, consistent with the upward trajectory seen since 2011. The delinquency transition rate for credit cards and auto loans increased by 0.6 and 0.4%, respectively. Now, let's go for the economic indicators. The Japanese economy advanced 0.6% on an annualized basis during the fourth quarter of 2022, below the market consensus of a 2% growth and after a revised 1.0% contraction in the previous period. Private consumption rose, while government spending increased for the fourth quarter and at a faster pace. Also, there was a positive contribution from net trade, as exports grew and imports fell. Lastly, business investment contracted for the first time in 3 quarters. The annual inflation rate in the U.S. slowed only slightly to 6.4% in January of 2023, from 6.5% in December, less than market forecasts of 6.2%. A slowdown was seen in food prices, while cost of used cars and trucks continued to decline. In contrast, the cost of shelter and energy increased faster. Compared to December, the CPI rose 0.5%, the most in 3 months. The core consumer price inflation rate in the United States, which excludes volatile items such as food and energy, eased for a 4th consecutive month to 5.6% year-on-year in January 2023. However, it remains well above the U.S. Federal Reserve's target. Annual inflation rate in the UK fell to 10.1% in January of 2023, from 10.5% in December. Inflation fell for a 3rd consecutive month to the lowest since September last year. The largest downward contribution came from transport, restaurants and hotels. Prices also rose at a slower pace for food and non-alcoholic beverages. Retail sales in the U.S. jumped 3% month-over-month in January of 2023, the biggest increase since March of 2021 and way above market forecasts. Biggest rises were seen in sales at department stores, food services and drinking places, motor vehicles and parts. On the other hand, sales at gasoline stations were flat. The so-called core retail sales were up 1.7%. Retail sales aren't adjusted for inflation. Producer prices for final demand in the U.S. increased 0.7% month-over-month in January of 2023, the most in 7 months. Goods prices jumped, led by a 6.2% surge in gasoline cost. The indexes for residential natural gas, diesel fuel, jet fuel, soft drinks, and motor vehicles also moved higher. Prices for fresh and dry vegetables decreased 33.5%. Meanwhile, services cost edged 0.4% higher, mainly hospital outpatient care. Now, a quick walk around the markets. West Texas Intermediate crude futures dropped 4%, to around $75 per barrel on Friday, and were heading for an over 5% weekly drop, pressured by lingering concerns about a potential recession. U.S. crude inventories jumped by 16 million barrels last week, the highest level since early October. At the same time, prices have also been under pressure after the U.S. government announced plans to release 26 million barrels of oil from strategic reserves. Helping limit the downside, the IEA and OPEC raised their forecast for 2023 oil demand growth, citing higher consumption from China. On Friday, U.S. natural gas futures fell below $2.30 per million British thermal units, the lowest since September 2020. Mild weather kept heating demand weak and stockpiles above usual levels. Meanwhile, the amount of gas flowing to U.S. LNG export plants rose to a 10-month high. For the week, the Dow lost 0.5%, while the S&P 500 and the Nasdaq 100 fell 0.8% and 0.2%, respectively. On the earnings front, Deere & Company's quarterly report showed upbeat profit due to higher prices and strong demand. Equities in London came under pressure on Friday, with the benchmark FTSE 100 pulling back from its record closing high, ending below 8,000 points, dragged by energy and financial stocks. In Germany, producer inflation eased less than forecast in January. UK retail sales volumes unexpectedly rose by 0.5% in January, thanks to sales promotions and lower fuel prices. On the corporate front, car maker Mercedes-Benz Group posted stronger revenue and better than forecast annual earnings, while Swiss chemicals company Sika AG reported a better than expected operating profit for 2022. The yield on the U.S. 10-year Treasury note, seen as a proxy for global borrowing costs, topped 3.9%, a level not seen in 3 months. Speeches from St. Louis Fed President James Bullard and his Cleveland counterparts supported the idea that the U.S. central bank will have to continue to raise interest rates to cool the economy. Money markets have now priced at least 3 more 25 basis point rate hikes this year and see interest rates peaking at 5.5% by July. Bitcoin traded at $24,000 this Sunday, February 19th. Looking back, over the last 4 weeks, Bitcoin gained 10%. Over the last 12 months, its price fell by 35%. Gold fell below $1,830 an ounce on Friday, sliding to its weakest levels in 6 weeks. Silver futures traded around $22 per ounce, a level not seen since late November, pressured by a sharp dollar appreciation and hotter than expected economic data. Recession concerns weighed on prices, as investors worried about lower industrial demand for the metal. Still, projections of weak supply limited the fall, as COMEX inventories remained under pressure and LBMA stockpiles plunged amid outflows to India. Technically, gold's consolidation from February 1 looks like a normal pullback in a continuing bull market, with the gold price coming back to test its key moving averages. And for lovers of Fibonacci ratios, the price has retraced 62% of the rise from last November's bottom. This is worth mentioning because traders use these technical factors for guidance. In current markets there is a strong view held by traders that a strong dollar is always the mirror image of a weak gold price. Sometimes the correlation is positive and sometimes not. Currently, the correlation is positive. To progress further, the rally in the U.S. dollar trade-weighted index must overcome resistance at the 105 level, which has turned this index multiple times. Currently, traders see inflation continuing to be a problem, with producer prices firmer than expected. The talk is of a 50 basis point hike in the Fed funds rate at the next FOMC meeting. Going by COMEX open interest, gold and silver are now as oversold as it gets. Opinion section. The bond markets continue pricing in higher interest rates in the months ahead, peaking towards the end of the year. The equity markets are extremely divided, in technical terms, and can go either way. However, economic fundamentals are more bearish than bullish. Big banks come out week after week with contradictory outlooks on the economy and markets. This shows how divided the expert opinions are. So, ignore them and take action based only on evidence. Good luck. Next week, in the US, the focus will be on the FOMC meeting minutes and speeches by Fed officials, personal income, spending, PCE price index, and second estimate for Q4 GDP growth rate. Have a nice week. The content of this video is for information and education purposes only. The viewer is advised to verify the information using the cited sources. If you enjoyed this video, don't forget to like and subscribe to this channel.